And before we get started, just a simple disclaimer here. And our featured presenters today is our business consultants, Aaron Piero and Keith Dickinson. Both have been with Farm Credit for many of years and have become our kind of go-to people and subject matter experts here at Farm Credit for the PPP program.
Thank you, everyone. Good to be with you again for what seems like an eternity now to discuss the Paycheck Protection Program. Aaron and I will be sharing with you sort of an overview of what's new with the program. We are not going to go top to bottom from the beginning, so to speak. So as there's a lot to this program, we are only focusing on what's new with the program as modified in the late December with the passage of the new Budget Act, which included significant changes to the Paycheck Protection Program. So where we're going to start is what's new with the loan program. We will discuss forgiveness a bit later, but we're starting out with what's new with loans. So the significant changes of what's new with the PPP program as amended by the Economic Aid of 2020. First off is, what can you use the money for? So, and this applies to new loans, which we'll discuss how you get a new loan and who's qualified for that in a bit, but also existing loans on the books that have not yet been forgiven. We still have the ability to use eligible payroll, rent, interest, and utilities. They've been there from the beginning. Now we also have added personal protective equipment, and this is specifically geared towards setting your business up to be safe with COVID restrictions. So think things like the plexiglass dividers for your cashiers if you're a garden center, the masks for your employees, hand sanitizer, stuff like that. In quotes there, operations expenditures. So that's a fairly broad category that is lacking detailed definitions, but think things like changes to the structures for compliance with COVID restrictions, things like that, but then also just general overhead. Property damage costs due to, specifically, see in parentheses, riots. So if you happen to have had looting occur and damage related to that, I don't think any of our customers had to deal with that, but just in the event that you did, you can cover those costs of rebuilding your business. And then supplier costs. So this is, again, a very broad category, but think things like if you're a livestock producer, your feed bill. If you are you grow plants, your fertilizer bill, your seed bill, things like that. But very important to keep in mind, you still must spend at least 60% on payroll. You can spend 100% on payroll. Our hint, as it has been from the beginning, spend it all on payroll if you can. Spend as much as possible. The loan is based on 2.5 months worth of payroll. You have up to 6 months roughly to spend it. Should be pretty easy to spend it all on payroll. Your forgiveness will be very much simpler if you spend it all on payroll, because you've eliminated a whole bunch of documentation by focusing just on payroll, because you got to put all the payroll documentation in there no matter what. So, and again, you have to, these changes will be of no relevance to you if you've already had your PPP loan and you've already had your forgiveness application submitted. The water's over the dam, so to speak, for that particular loan. So now Aaron is going to jump into the covered period.
All right. And I think, Keith, that SBA did outline some of those things, like operations expenditures are really if you move to a cloud-based software or something. So if anybody really needs those, just head to the SBA website for the specific excruciating definitions, because you will find them in there. Good late evening read. Covered period, right? We've talked about this since the beginning. It begins the day you received your funds, and that ends either 8 weeks after you got the money, or 24 weeks was where we started. You now have the flexibility to pick any day in between 8 and 24 weeks after the period. If you take a second draw loan, You cannot have your covered periods overlap. That means you have to have spent and have been able to show that you spent all of your first draw funds before you get the second draw money. And there's no more option for an alternative payroll covered period for easier record keeping. I think that comes because you get a lot more flexibility in what covered period you are picking. And if you have up to 24 weeks to spend the amount of money you got based on 10 weeks of payroll earlier on, that shouldn't be too hard to do.
So what are the opportunities for additional funding through the Paycheck Protection Program? So there's three main categories of funding under the program as it stands today. So SBA has created some new language here. We have first draw loans and we have second draw loans. And the first draw loan is think of it as the first time to the bank, your first loan. So many of you had a loan that you received sometime in 2020 in a PPP loan. That was your first draw loan. Now, let's say that under the former rules, you were not eligible for a PPP loan at all, or you chose not to apply for a PPP loan in 2020. You could go now, and because there's additional funds available and the banks are able to make loans again, you could go and get your first PPP loan. So that would be a new first draw loan. For a very specific set of circumstances for very specific businesses, some businesses can go get their first draw loan that was received last year, have it recalculated, and have additional funds added to it. We will explain that in detail. And then finally, if you meet certain specific criteria, you can go back and get a second draw loan, so a second PPP loan in entirety. And we will explain exactly how you qualify for that. So some other important pieces are that for any of these, you submit your application to your PPP lender, who then submits to SBA. Things that are different with the applications this time is that SBA is going to be doing some additional checks for fraud. And so the approvals will have a bit of a delay. So once your bank has submitted that to SBA, I describe it as they're going to push the clutch in for a little while before they get you going down the road. So it may take a little more time to get the funding than it did in the first round.
Okay, so these new first draw loans are for people who have not ever applied for a PPP loan before and find themselves eligible now. That may be that you just didn't think you needed it last summer when you had the opportunity to apply. It may be that you decided, no, I'm not going to take it after all. Or it may be that the new rule changes from this Economic Aid Act now make you eligible. And there is a special carve out for farmers who are sole proprietors who file a 1040 with a Schedule F. You can qualify based on gross income as opposed to net income, which means if you had a Schedule F loss in 2019, you were previously ineligible. Now you may be eligible for a PPP loan based on that same Schedule F.
So what about these recalculations that we mentioned? So we have, again, as I mentioned earlier, very specific sets of circumstances on who can qualify to have the loan recalculation. It is not a wide open door for every PPP recipient to go back and have money added to them. So be very sure you pay attention to these specific guidelines here. So if you are a partnership, and that includes an LLC who is taxed as a partnership, and you applied early in the process before the rules for partner income were released, or even if you just didn't include partner income, you can go back and have your loan recalculated to include that partner income. Now, that is the only piece of that loan that can be recalculated, assuming none of these other categories apply to you in addition. It's not a total recalculation of the entire load, in other words. It's only specifically adding the amount that you could have received for your partner income. And when we say partner income, SBA is very specific. It's the amount that for each individual partner that is listed on box 14A of your Schedule K1. Not the draw, not what you pay yourself, not your guaranteed payment. It's your net earnings from self-employment, which has been adjusted for depreciation, Section 179, etc. That's found on box 14A of that Schedule K1. So for anyone who returned their loan, and I know of a few folks that did this, they got the money and then they changed their mind and they gave it back. There was a safe harbor period when you could do that. There would be no interest accrued that you would needed to pay back. You could just say, oh, sorry, I changed my mind, take it back. You could do that. You could go back and say, nope, I changed my mind again, give us our loan back. If you were approved for in like that, so that second bullet is people who sent everything back. Let's say you were approved for 100,000, but you only took 80,000. You could go back and request that other amount for which you were approved. Now, pay attention that this says approved. This means that the amount that was on your application and approved by your bank and SBA, this does not mean that you made a mistake and did not put enough down, you did not put the full amount that you were qualified for, say, in employee wages. Or let's say you chose to purposefully reduce the amount that you requested in your application because you were afraid you wouldn't be able to pay it back and you'd pay it all out in 8 weeks under the original rules. Those are not eligible for a recalculation. It's only if you were approved for a certain amount and when you went to closing with the bank, you said, give me an amount less than for which I was approved. And finally, well, the last two categories, those sole proprietors that Aaron mentioned who file a 1040 with a Schedule F. Very specific here, not partnerships who file a Schedule F, only sole proprietors who file a Schedule F with their individual 1040 can qualify on gross income instead of net. So short version is if you had a net income in 2019 that was less than 100,000 and you had a gross income that was higher than 100,000, there may be an opportunity for you to go back for more money. We had some sole proprietors who had a loss in 2019 on their Schedule F. They had qualified for very little money, or they had no money on their own earnings. They may have qualified for their employees, but those categories, they can have a recalculation and have those sole proprietor earnings added. But again, only Schedule F on sole props. And finally, certain, in quotes, seasonal businesses, and we're going to define that, can go back and recalculate if they would be eligible for more money under the seasonal rules. Again, can't emphasize this enough. There are no do-overs for mistakes. You know, this is only for these specific categories that you can have a recalculation. Now, Aaron's going to talk about these seasonal businesses and what do we mean by that.
And the reason that we're so specific here is most of agriculture would consider themselves a seasonal business. SBA has further defined that, though, and they say you have to say yes to one of these first two and yes to one of these second two to meet the definition for a seasonal business according to the PPP program. So you need to have been in business, open for business, for less than 7 months of the year. That's typical, right? So it's a very highly concentrated activity. Say you're a pumpkin patch, right? That's only open in September and October. That is definitely less than 7 months of the year. Or if you're a business that is so highly concentrated that you receive at least 75% of your gross income in 6 months of the year, that could also qualify you as a seasonal business. Then, to make sure that you meet the entry parameters for the PPP loan program, you need to have been in business and open for business on the 15th of February on 2020, right before all this program started. However, some of you who are going through online applications may have noticed an issue you were trying to get through with how many employees you had on February 15th, but as a seasonal business, you hadn't opened up yet. The alternative route in here now is SBA says if you were in business for 12 consecutive weeks between February 15th, 2019 and February 15th, 2020, you would also qualify as a seasonal business. So you need to be able to check the box on one of the first two and one of the second two, and you'll be considered a seasonal business.
So those were the modifications and the first draw loans. Now we're going to talk about the second draw loans, the second dip to the bank, so to speak. So first off, you must have already received a first draw loan. So you must have already had a PPP loan in some shape or form. You must have spent it all. And this would also include if you have that first draw loan modified. So before you can get your second draw loan, if you say you qualify for one of those modifications we just went through, you have to have gone back, gotten that approved, and spent it. You have to spend all the money the way that they say to spend it. And once we've done that, you must also have had a 25% or more reduction in that gross income for the business. And that is, there's two ways you can qualify here. The simple route is if your gross income for all of 2020 was 25% less or more than all of 2019. The easy way there is to look at your tax return. The net income of the business was, the gross income of the business was 25% or more or less in 2020 compared to 2019 for the full year. Or if you don't meet that, you can go in and look at individual calendar quarters, and we have those dates up there for you for reference to see when those are. You take, let's say, for example, January 1st to March 31st of 2020, look at what your gross income was in those 3 months, look at the same 3 months in 2019, and if 2020 is 25% less than what you recorded in 2019, you qualify for as if you had the whole year. Now, you want to use the accounting method used on your tax return. SBA uses language that says use what is typical or normal for your business. So, if you file cash-based on your Schedule F or your 1065, use cash-based. If you use accrual-based, typically on your tax return, you're going to want to use accrual-based.
In this round, to make sure the money gets to the smaller businesses that need it the most, SBA has said you have to have 300 or fewer employees, and that is a head count. Nothing to do with FTEs right now. In the first round, larger businesses with up to 500 employees could apply. So note that it's smaller this time around. And the maximum loan amount is now $2 million versus $10 million the first time around. And again, if you're a sole proprietor, farmer, or rancher, you have the option to qualify on gross income rather than net for your own section. Right? If you have payroll, that part's already been calculated. It's just the farmer compensation for the one individual that has a chance at being considered this time.
So how do we calculate the amounts that you're eligible for? So let's say you've already done the math on the gross income test and you determined that you did have this 25% reduction in 2020 in any quarter or full year. So you can use either your 2019 payroll data or your 2020 payroll data when calculating. The 2019 is what you used when you applied for your first draw, and that's what your lender already has on file. It's still that 2.5 times average monthly payroll. Absolutely, you don't bother with this calculation until after, in these decisions, until after you've beat those established eligibility criteria. So you got the 25% reduction. And so if you're eligible, you complete the application, you send it to your lender. If you choose to use the 2019 data, they do not require any additional documentation other than that application that you fill out and sign. and then they can submit their application, the application to SBA, because that's already been approved and vetted. If you choose to use your 2020 payroll, because we paid people a lot more money in 2020, for example, and you feel like you would qualify for a higher loan amount, you will have to provide more documentation. You'll have to provide, think back to what you had to provide as documentation when you applied for your loan the first time. You'll have to do that all over again with 2020. So, certainly think that through and, choose is if you had an increase in payroll, is it enough to warrant the time it's going to take me to get this together and submit it to the lender? And then, of course, if the lender receives new documentation, they're going to have to spend some time reviewing that. So again, it's going to be how quickly do we want the money versus is there an opportunity for more money, and weighing out those options. And I can't tell you what the right answer is for you. You have to decide that.
Okay, so in summary, right, first-time borrowers, if you've never gotten a PPP loan and you may now be eligible, or you just decided not to take a loan last time and you would like one now, you have the ability to potentially apply. If you have an existing PPP loan, in certain cases, as Keith went through, you may be eligible to recalculate that how much you are eligible for now, based on the cumulative rule changes that later applicants got to take advantage of. So it's really a truing up to make sure that everyone has the same opportunity. And there is then an opportunity for second draw loans who are borrowers that have received and spent a previous PPP loan and have had a significant reduction in their gross income as a result of the COVID-19 challenges. And we've gone through the specifics of how you know you're eligible. We've got a tool to help you out, so stay tuned for that. And if you need help with this, you can hire consultants to work on that for you, and that's different than the last round. So know that help is out there if you need it, but everything is on the SBA website for you to be able to go through and get started yourself.
So where can you apply for one of these PPP loans? So if you've already received a PPP loan, you're in that first draw category that you already received a loan, have one on the books. Go to that lender that you went to the first time. So if it was Cabbage, you're going to be working with Cabbage again. If it was the First National Bank of Joe Smith USA, you go to the First National Bank of Joe Smith USA. Now, one caveat there. If the lender sold your note, or if that bank was bought out in the interim period, you're going to work with whoever currently holds that note. The banks were eligible to sell these notes. I know that some did, so you'll have to make sure you're working with that note holder. So if you did not get that first draw loan yet, and you determine that you're eligible, we at Farm Credit East, we will take an application, but you must be a current credit or financial services customer. And then current means you have a loan on the books with us today, or we are currently working with you on taxes, payroll, records, or consulting.
So how do I apply? Well, you are already done with step one. If you're here watching this webinar, never hurts to rewatch it either to get the answers to questions that come up later on. And that'll help make sure you are fully prepared. Next, we have a PPP eligibility tool to help you figure out if you are indeed eligible based on these new changes, and use the results and the link it gives you for the application and the instructions if you're eligible. Once you have gone through that, you will complete your application and make sure it's complete. If you're missing information, that is a very good reason that your lender could find to put it at the back of the line so that they can work on the complete ones first. So pay attention to the instructions, make sure you've got everything complete as they specify. Then that application is going to go to your current PPP lender, right? So Cabbage, your local bank, whoever you are working with. And if you need to, fill it in online, you'll have all the information available already, because some banks are doing everything completely electronically through a portal, right? It's just going to be the way that they're collecting information. Everything you do on the SBA application, you're going to need for that, though. So all this is good things to go through. And then if you are a current Farm Credit East customer and you did not get a PPP loan yet, you can reach out to Tom Daly at farmcrediteast.com. Also, if you would like help in completing your loan application or your forgiveness application, we still have that opportunity available at farmcrediteast.com/PPP consult.
So we told you where you can apply. Now we're going to tell you when you can apply. Now, our viewpoint here at Farm Credit has been we want to do it the right way the first time and not rush unnecessarily. We've seen a lot of mistakes made throughout this process due to urgency and people rushing to get things done, not signing things, all kinds of mistakes. So we want you to make sure you're doing it correctly the first time and not wasting your time, and so that we can focus on getting this thing done for you as efficiently as possible. SBA believes they have plenty of money. So far, as of early morning yesterday, they reported they have 60,000 applications so far for about $5 billion. There's $285 billion total, so just a bit of a drop in the bucket so far. Farm Credit East will be accepting eligible applications starting February 1st. We told you the parameters by which you could apply to us. That's existing PPP loans on the books, or you've never had a PPP loan and you already work with us for some other service. Those folks can apply February 1st, which is about not too little more than a week away. The deadline as of today for applying for any of these new loans or modifications is March 31st of this year. We put in parentheses, as of the date of this webinar. There have been many changes, many extensions throughout the process. There's no guarantees that will occur. So plan on March 31st being your deadline, and plan on, if you're going to put in an application, let's get something done in February. Let's not wait until mid to late March to start thinking about it, because then look at bullet number 1. We want you to do it the right way, not rush through it. And then finally, we mentioned this before, but SBA is doing some of those fraud checks. So when the lender has, approved your application and submits it to SBA for their approval, there's going to be a bit of a time delay between when we get it, we submit it, and when they can get the money to you. So with that, we're going to jump in on, okay, go ahead, Aaron.
Yep. So that wraps up the loan changes. Now we're going to be talking about forgiveness, because there are a few forgiveness changes that go along with it. We want to make sure that you've got all the info you need as we go through both of these, because Keith and I both got new jobs as this happened, because now we're going to be doing loans and forgiveness at the same time. So take it away, Keith.
Yep. So summary of some of the updates here. The same timeline as before. The lender has 60 days to review your application for forgiveness, and that's a complete application for forgiveness. Remember what I said in the last slide that I was talking to you on. We want you to do it the right way. Don't rush to do it. So make sure you filled it out completely, filled in all the lines correctly, signed it all correctly, and submit it. Because one of the things we're finding is people are rushing through this. They don't know a piece of information, and so instead of finding it out, they submit the application without it on it. Well, sorry, we have to send that back to the customer to start over. And so it's 60 days from when that final complete application has been submitted. The lender then has 60 days to review it. And then once the lender has approved it, they submit their recommendation to the SBA, and SBA then has another 90 days for them to turn it around. Our experience thus far has been SBA's response can be anywhere between 2 days and 3 or 4 weeks in counting. So they have that flexibility of 90 days. They're going to plan to use it, I believe. A big change for many of you is those EIDL loan advances that many of you received after your PPP loan. Those advances originally were going to be deducted from your loan forgiveness amount. So it was that old, you can't double dip. You could only get one or the other. But now those will be forgiven. So if you had an EIDL loan advance of $10,000 and no longer will you have to pay that back on your PPP loan. And if you'd already submitted your forgiveness application and had it approved, you're going to get a letter or may have already gotten a letter from your lender saying, sorry, fine, you don't need to pay that back either. So that's taken care of. So also, if SBA in a review has determined that you were ineligible for PPP in the first place, let's say you didn't meet one of the standards that we mentioned, or submitted a fraudulent document or something like that, or just got the math wrong to where you weren't really eligible, you cannot have your loan forgiven. Should be somewhat intuitive. So if you weren't eligible for it in the first place, your loan's not going to be forgiven. You're going to have to pay it back. And finally, if you do not apply for forgiveness within 24 weeks, that's about 6 months, and 10 months after you receive the funds, so that's roughly 16 months after the day you received your funds, your lender will notify you when repayment must begin. So you've got that long time period after you get your money. You got that 24 weeks to spend the money, and then you got another 10 months to get your application in. Now, what we've been telling folks from the beginning, don't wait till 9.5 months to get around to getting organized. Don't necessarily rush, but get yourself organized. As soon as you've gotten through your money, start getting your ducks in a row, get your documentation, fill that application out, submit it to your lender. Give yourself some time of not pushing to that end of that deadline when, oh, by the way, a whole bunch of other procrastinators are going to be pushing in too. So let's make sure you're not in that crowd.
Okay. In these forgiveness rules, one of the things that has been changed and clarified several times is what an owner is eligible for their own compensation to be forgiven. And the reason for that is SBA clearly stated they did not want the opportunity for any windfall to a business owner above and beyond their normal compensation if they were to not hire employees and just keep the money for themselves. So if you got a PPP loan in 2020, your potential forgiveness for your owner compensation would be based on how much you paid yourself in 2019. If you get a new PPP loan in 2021, it'll be based on the year you used to calculate the loan amount. It will also be prorated for the covered period you choose, meaning if you choose 8 weeks, it'll be worth less, or you will have less to consider because it only covers 8 weeks of the year than if you pick a longer covered period. And one important thing to note is that owner compensation forgiveness is capped at $20,833 across all of your businesses. So if you are a partner in one and have a Schedule F and a Schedule C, you are still totally eligible for up to $20,833 across all of those businesses in total, because that would be the equivalent of any of your employees. Remember, you couldn't count more than $100,000 of compensation for them prorated for the covered period. That's where that number is coming from the original PPP calculation.
So what can you count as owner compensation? And as you know, with all government programs, and as any accountant would say, well, it depends, and no change here. So they're all based, as Aaron just said, they're all based on the tax year for which you provided that loan documentation. So if you chose 2019 or 2020, or your original loan was 2019, that's the year that you use. So first off, if you're a sole proprietor, just a one-person show in terms of the owner of the business, who's the owner of record, your Schedule C, if you run a Schedule C, have a Schedule C as you file, that's your net income off of your Schedule C. If you are a Schedule F, it's the difference between your gross income on your Schedule F and employee wages. Now, that's a shortened version of what the rules say, but that's the correct calculation. So if you're a sole proprietor with no employees, it's simply your gross income. But if you're a sole proprietor with employees, it's the difference between that gross income and the wages paid. So, for example, you have a Schedule F, you had $500,000 of gross income, you paid some employees $200,000, you would have $100,000 or $300,000 of gross income that would remain to be eligible. But as Aaron said, it's up to $100,000, so you'd be capped out at that $100,000 of eligible owner compensation. So our partnerships, I've said this before in terms of the recalc, but just to remind you, it's your box 14A of Schedule K1. That's where you find those eligible net earnings. But then you multiply, and this is new, you multiply by 0.09235. Where in the world did they get that? Well, that's the amount that is essentially taxable due to self-employment earnings. So they've gotten a little more fine-tuned there with the calculation. S Corp. So you're an S corporation. Your wages and retirement benefits, capped by those prorated actual annual amounts paid. So the actual amount that you were paid as an owner, that's how much you can count up to that 100,000, of course. And that's for if you own 5% or more of the business. So if you're 5% or more of the shares, if you're under 5%, you get to count just as any other employee. Now, note for the S Corps, health benefits paid by the business are not countable as eligible for forgiveness. C Corps, well, you get everything that the S Corp gets the same way as the S Corp, except you get to count your paid health benefits. Now, let's say you're an LLC, figure out how you're taxed, either as a sole prop partnership or corporation, and you follow the rules for that entity. And then finally, our fishing vessel owners, there in late June, we had a mad flurry of suddenly fishing vessel owners were eligible to use their 1099s for their crew. Note that's only fishing vessel owners that can do that. You cannot receive forgiveness on the crew member who sought forgiveness on their own loan. Because remember, initially, those 1099s, anyone who received a 1099 could apply for a loan as an independent contractor. That's still the rule. However, for those fishing vessels that later could count the compensation they paid to a crew member that threw it at 1099, they cannot get forgiveness on the amount that crew, if that crew member had already received a PPP loan on their own 1099, they can't get dual forgiveness. It's only the crew member that gets forgiveness in that point. So then you have to end up paying back that attributable amount. So that's why SBA is going to be reviewing all of the forgiveness applications from fishing vessels.
And I think Keith brings up a really, really good point. In the IRS's eyes and in SBA's eyes, if you pay someone with a 1099, they are not an employee. They are an independent contractor, and they are responsible for their own PPP loan as well as forgiveness, no matter what you call your relationship with them. And as such, the forgiveness rules are different. As Keith just described, they need to take that on. Fishing vessels are only separated out because SBA looks at that as a partnership revenue sharing arrangement because it's called crew share. And there's a special box on the 1099 for that. So just really nuances for this one very specific set of circumstances. All right, and that brings us into forgiveness reductions. They are the same as they have been since the beginning of PPP, in that if you got a PPP loan and you cut wages of an individual by 25% or more, and again, that's the wage rate. So if you were paying me $20 an hour and you decided 14 during the covered period, you're going to be subject to a forgiveness reduction because you didn't maintain my employment and my pay at the same rate. The other reduction comes from reducing FTEs or hours. If you haven't cured those reductions, then your forgiveness will be reduced proportionally. So say you had 10 FTEs when the covered period started, You laid off 2 of them, that would be 20%. So you could expect a forgiveness reduction of 20% if you didn't hire those folks back or replace those jobs. These kinds of reductions won't count against you, right? If you documented any good faith efforts to hire, so say I got laid off and then you said, Erin, come back to work. And I said, no, thanks, I'd rather collect unemployment. Well, you had to let unemployment know that. I refused your offer of rehire. And that is going to be your documentation that you did what you're supposed to do in order to qualify for not having a reduction here. If you fired someone for cause, or if it was their idea to leave because people were still moving during COVID. So if one of your employees, their spouse got a job across the country and they left, that's not going to count against you either. Note that borrowers who borrowed $50,000 or less on their PPP loan are not subject to these restrictions. That was a special carve out by SBA to support the extra small businesses.
So, which form do I use to apply for forgiveness? And this is everything has been a moving target. The forms have been coming out slowly but surely. And we've got some modifications since when we first started talking about this. So, for loans of $50,000 or less, you can use the 3508S. And the other piece, the SBA has used some of their authority and made what they call a de minimis ruling. So if your loan is under $50,000, they consider that to be a minuscule loan in context of the entire program. And so they are exempting those loans from any forgiveness reductions. So those reductions that Erin just went through, if you had a loan of $50,000 or less, you're exempt from that requirement. So that 3508S, you submit the form, and there you go. You do not have to submit any documentation anymore. This is a change that, quite frankly, we just caught even after we did the first draft of these slides. Now, you have to maintain those expenditures or those documents. So our advice is prepare the documentation because you don't know when SBA is going to send you a note and say, hey, we'd like to look at your documentation because there's an extended period. We're going to talk about that. So that's your $50,000 or less loans. $150,000 or less. Now, this was the change that came through in the new law that was passed. And of course, we've all read the articles that are out there about what it means. So here's how SBA is determining this at this point. If you have that loan of $150,000 or less, you are asked by SBA to use that 3508S, the same one that the $50,000 and under. You still need to have those documents in place for your expenditures. You're not going to have to submit it with your application. But again, our strong recommendation is to have it organized and in a file because you're going to be signing a certification on that form that says, I certify, I swear that this is correct, that I spent this money the right way. And the SBA has the right to come check to make sure that you did spend it the right way. In addition, if you are over 50,000 but 150,000 or less, so that other 100,000 of the 150,000 or less, you in addition still have to prove to yourself before you sign that form and have the documentation in place to show that you did not reduce those wages or FTEs, what Erin just discussed. You don't have to submit the documentation, but again, it is our strong recommendation that you do the math, have the documentation in place because SBA has reserved the right to hold you accountable to that via random checks, audits, or whatever you want to call it. So now, if you have a loan over $150,000, you may use the 3508EZ. You cannot use that 3508S, or you can use the 3508. The only time you can use that quote-unquote EZ form is if you've had no reduction in wages or FTEs. You have to submit the documentation of expenditures, however. So there is documentation. You have to show that you spent the money in the right way during the right time period. during that 24-week covered period, and you spent 60% or more on payroll, and then the remainder is spent on those qualified non-payroll expenses. You still need to do the math to prove that you did not reduce those wages or FTEs, even though you don't have to submit the documentation, because again, SBA can ask for it at any time, up to 6 years later, they can ask for it. So you want to have that in place in a file where you can grab it when they come asking, and so that you can truthfully initial that box that says, yes, no, I did not reduce wages or FTEs. So if you did reduce wages or FTEs for a loan over $150,000, or even I suppose for that $150,000 or more, we suggest using you need to use the 3508 if you're over $150,000, because you need to document that and have that calculated correctly. So yeah, 3 forms and 4 different nuances of when you use them. So it's complicated. Certainly our consultants can help walk you through that if you're having trouble kind of figuring out how to do these forms correctly.
If there is one thing you leave this webinar with today, it is this slide. There are no forgiveness applications that allow you to ignore the documentation, okay? Because you as a borrower, as Keith said, are signing the certification that, yes, I did all of these things. But it's like understanding how much am I going to get in an income tax refund. I don't know that until I've actually done all the work of my return to calculate how much that refund is. And here's why that really matters. Because as we've been talking to producers through the season about forgiveness applications, there are scenarios that are very normal in our businesses that could count as a reduction in fees depending on your base period. So think about it. In a really crazy weather year where some folks got almost no precipitation and that impacted when the crop came in, if you didn't have your harvest crew working as many hours during certain time periods because you were either waiting for the crop to get ready or it came in early so you were done early, that's technically a reduction of hours because you didn't have work for them consistently for when you're averaging it out. Because remember, nobody counts for more than 40 hours in a week. Right? Another one is, in our green industry businesses, you typically reduce your workforce after the busy season. So if that happens to fall within your covered period and you weren't going to hire those folks back, that could also count as a reduction of FTEs. So it's real important that you do this work to document it, because you're going to need it to be able to complete the application accurately. And as Keith is making fun of me because he's heard me say it so many times, most people can't remember what they had for breakfast last Thursday. There's no way you're going to remember every specific circumstance in 3.5 years when SBA comes a-knocking.
So a little bit more on that required documentation. So there are additional calculations that do not be submitted in order to correctly complete that application. You know, if you're going to certify that we did not reduce wages, you need to do the math to show to yourself that you did not reduce wages. Don't just say, and you got to make sure you're looking at it the right way. The wages, somewhat intuitive, but still make sure you're doing the math the right way. The FTEs, there's not a way that you can just guess whether or not you did the FTEs. Aaron just outlined some of those scenarios where you don't think you reduced them, but you may have. So make sure you're actually sitting down, doing the math, making sure that you're answering that question truthfully. What actually needs to be submitted varies by form, business entity type, and what you actually spent the money on. Now, let me just pause here. When we say what you spent the money on, and even back further when we were saying you have to have spent all the money, I know that some folks when they got their PPP loan, they went to their bank and they created a separate bank account just for this money. Well, first off, you didn't need to do that, and you don't need to do that. There's no requirement to have that money separated in some way, because money is money, right? Whether you got it from PPP or you already had it in the bank, that dollar doesn't know where it came from. However, you must be able to document that you spent all that amount of money. So it's showing the proper accounting. So don't get confused when we say spend all the money and what you spent the money on, showing you spent it all. We're talking about dollar amounts, not that you emptied a specific bank account. So, the instructions for those forms and what documentation, they are all detailed. The forms now include the instructions along with them, which was a nice change that the SBA made. And again, certainly you can hire a consultant to work through that with you as well. How long do we have to keep it? So every borrower has to retain this stuff for 6 years and made available for SBA. So like Aaron just said, if you can't remember what you had for breakfast on Tuesday, I don't think you're going to remember how many hours your cousin Bob worked in 6 years ago. So make sure you have that documentation filed away. Now, one nuance that is changed for loans under $150,000, the time period is slightly less. They've split it up, but just figure you're going to be holding on this stuff for a while. So make sure you've got it organized and put in a good place.
So let's talk a little strategy. Why do we keep saying spend all the money on payroll? Well, it's a Paycheck Protection Program, so that was really the purpose of it. So if you're following the spirit of the program, right, things are going to go a lot happier in any conversation that you're having about it. And practically speaking, right, you got funds for 10 weeks worth of payroll, and everyone has up to 24 weeks to spend it. So that means you've got a lot of opportunity. That shouldn't be too hard to do. Now, when you're gathering the eligible expenses for your forgiveness application, that means the payroll should cover it, not just the 60% hurdle, but all of it. And since you have to demonstrate that you spent at least 60% on payroll, right, and you have to do all the math with the payroll, you might as well concentrate there so you can do less work and still get the results you need. We also wanted to emphasize, don't do any more than is necessary. If you send an application with your entire accounting package because you want to make sure you've covered every expense possible that could maybe be counted, you're creating a lot of extra work for whoever's reviewing that. And I'm picturing, as Keith said, a lot of last-minute procrastinators popping all these forgiveness applications into SBA at the very end of the time period, and you got that piled on the desk, right? I would say human nature is to put that one off, right? So let's give the reviewers no more than they need, give them exactly what they need. So that means if employee wages cover it, don't go complicating things by looking for benefits or taxes or the owner comp part, right? Concentrate on what you know for sure. Because the more you give your lender, right, the more time it's going to take. And it also increases the likelihood that you forget something that you actually need. And we've seen that a lot as we've been receiving some forgiveness applications. We don't want to have to send it back to you to change anything or add anything that you forgot. Let's do it right the first time so that we can move on to something that's even more productive that our businesses need us to do.
So finally, we're going to wrap up here, and I'm sure I think we have a little time for questions, but here on the screen, and we'll leave this screen up for a while so you can make sure that you write these things down. We got 3 helpful links for you. So first off, point out our COVID-19 resource hub Farm Credit East that our Knowledge Exchange division has put together for you. That includes everything that we know about PPP, all of our resources that we've put together since the very beginning, but also quite a few other good resources for you to use on other tax programs and or just general resources to assist you as we continue to navigate through this pandemic. Second there, and as Aaron mentioned, I believe as we were going through, we have put together a calculator for you to use. It's in a sort of a survey format, and there's actually a couple different potential surveys for you to take of whether you're looking to see if you're eligible to recalculate a loan or whether you're looking to be eligible for a second draw loan, for example. But you can go to that. It's at farmcrediteast.com/PPP eligibility. Go through those. In fact, we're hoping to crash that website today because we're going to send all 297 of you to that website in a short period of time to go see if you're eligible. Go through that first before you call. Do us that favor, because what we found is that everybody thinks they might be eligible, but very few of you actually are. I'm just laying it out for you as the truth as we see it. I've helped folks do calculations, probably 10 or 12 people have had conversations with them over the past week, and so far only one of those actually is eligible for any additional money. So go do yourself a favor, do us a favor, go ahead and go use that tool that we spent some time putting together, see if you're eligible, and then when you find out that you are, then we point you in the right direction to getting your self-organized and submit your documentation.
And
finally,
key point.
Yep.
Key point that impacted those calculations. How do you consider CFAP money?
Oh, absolutely. That was the most common mistake folks made. So we all, many of us are familiar with the acronym CFAP, Coronavirus Food Assistance Program, I think is what it stands for. One of my customers called it the Election Day giveaway, where you could apply to your FSA office. Many agricultural businesses were eligible. You submitted some basic documentation and you got a nice big check submitted in your bank account sometime in December. Guess what? That's gross income. That knocks a lot of people out for that fourth quarter or for the year. So that counts. PPP money does not. PPP does not count as income for purposes of determining if you're eligible for second draw, but the CFAP payment that you received in December, that very well could knock you out from eligibility for the 25% reduction. So, as a coworker would say, you have already received your stimulus in that regard. So then finally, the last website there, if you would like to hire one of our consultants to assist you with both either the loan calculations for a new loan or a modification, or to help you with completing your forgiveness application, or quite frankly, just to do it for you, you can go to farmcrediteast.com/PPP consult, and you'll get directed to a consultant that can help you out. So with that, Kyle, I'm sure we have maybe one or two questions out there. So let's dive into them.
So Keith, it's John Keltner.
Oh, John, go ahead.
So we've got an energetic group of customers on a call today. Many more questions than we'll get to. I think a number of you will find you asked questions that were then later answered during the course of the presentation. But we will review all the questions and follow up with a FAQ because they group. There's a number of questions that kind of group together. But with that, we'll try a couple things. First of all, the most popular question, Keith, was the ones you answered first, both CFAP and then the what's included in gross income or PPP funds included. So that was the most popular question.
Okay.
A couple things. This is a common question that's popped up. What is the deadline for applying for PPP-1 forgiveness? And also, along with that is, should I apply for forgiveness before I see if I'm eligible for additional PPP funds? Those are probably the next two most popular questions. Do you want to try to address those?
Yeah, I'll take both of those. And so the first one, when is your deadline for PPP forgiveness? Now, we did cover this in our webinar, but I'll remind you of that. So for PPP-1, and it's the same math for your second draw. So the date that the money hit the bank from your original PPP loan, you had 24 weeks to spend the money. From that date, that was exactly 24 weeks. If you got the money on a Wednesday, that date will be a Tuesday. Exactly 24 weeks from the date that you received the money. Mark that date, and then you have an additional 10 calendar months from that time period. So let's say that date was December 31st, because that was the end of PPP-1. And I should mention, if you got your money, I think it's like July 20 something or later, December 31st is your deadline, because you had to spend the money by December 31st or 24 weeks, whichever came first. So let's say December 31st was the end of your 24 weeks. That means October 31st, 10 months after December 31st, is the deadline by which you must submit your forgiveness application before the lender would then start requiring you to pay some of that loan back. So let's back up. PPP2, you get a second draw loan, it's the exact same math. So whatever date that money hits your bank account, let's say it's March 2nd, you have 24 weeks after March 2nd to spend the money, and then you have an additional 10 months to complete your forgiveness application. The second question was, when should you submit, and do you need to submit before you apply for PPP2? So here we get, it's one of those it depends answers. So follow me through this. If you are submitting a recalculation request, you must not have submitted your forgiveness application yet. So let me just pause there. So if you are looking to have your loan recalculated and you already got forgiveness or submitted your forgiveness application and it's been submitted to SBA, too late. You do not qualify. You can't go back and have that modified. So that's the first part of that. Second part of that, relative to applying for the PPP2 or second draw loans, as we're calling them, as what SBA is calling them. They say if you have 150,000 or less or more, you must submit your forgiveness application before or simultaneous to your loan request. Our advice is to make sure that you qualify for full forgiveness on your first loan before you apply for your second loan. But the rules state that loans of 150,000 or more must have submitted their forgiveness request before that. Now, am I getting that wrong? No, actually, I'm getting that wrong. I'm sorry. I just told you wrong. You must submit your forgiveness request for loans for 150,000 or more for your first loan before you can request forgiveness for your second loan. So forget what I said about submitting forgiveness before you apply for the second loan. I stumbled on that last part. Aaron, can you make sure I did it correctly?
I think I heard at the end, you need to get your forgiveness applications in the order in which you got the loan. So you got to do your first forgiveness application, and then you do your second one. You can do them together,
right? But
you can't do the second one first.
Right. But you don't have to submit it prior to applying for a second draw loan. That's really what we're being asked.
Correct. I understand that as well.
Yeah.
But make sure that because you have to document that you spent it all anyway, that's a good check, I think, as you said, to make sure that you have spent it all before you go apply for round two, since that's one of the requirements, is that you've spent it all.
Yep.
Oh, okay. Couple of things. Just to point a note for those of you on the webinar. We've reached the 12 o'clock time limit. We will go for probably 10 minutes more or so for those that want to hang on. Again, there are a number of questions, so we will provide an FAQ with answers to those questions. So you'll be able to check back to the website for answers to those questions, but we will try to answer a few more for those of you that are able to stay on. A couple other questions, even though they were answered, Keith and Aaron, during the webinar, they keep popping up. One is, do I really need to go to the first lender that I got my PPP loan from, and how would you answer that question?
So yes, absolutely you want to. If you're looking for a first draw recalculation, you need to, because they have the note. They're the only people that can modify that loan. And then for the second one, you are saving a lot of time and effort. And that is really what SBA is intending with this, because that bank already has all the information they need for that. Just need your application now. So yes, stick with your first PPP lender.
Okay. The next question.
Anything I would add? Well, the only thing I would add to that is most banks, including Farm Credit East, has already decided that we're not going to be taking, second draws from that where the bank was at a first draw. And I think most lenders have that approach anyway. So I think that you're not going to have much choice with that.
The other question that's been coming up quite a bit is, are the new revised forms available, and where are they? Specifically, both forgiveness forms and the new PPP loan request forms.
Right. So
Those are
the answer is yes. Okay. You want me to take it, or you want to?
Yes. Go for it.
So yes, all the forms are out, including loan application forms. You can get them directly through navigating the SBA site, or you can go to the resource hub. We have links to all the forms there. And also, to save you some time, you go through that PPP eligibility calculator. If that calculator determines you're eligible for one of those recalculations or second draw loan, we've got a link right to the form built right in there. So that might be your easiest way to find the correct form. Also, the forgiveness forms, they're all updated on the SBA site too. We have links to that on our farmcrediteast.com PPP section of the resource hub.
Aaron, I'll throw you this question. Will we have to show proof of the 25% reduction, particularly if we use the quarterly method?
Yes, you're going to have to in order to even think about getting that forgiven. So let's do it right now and make sure it's right so there aren't any problems down the road. And that's also what we want to say about all that documentation, because SBA makes it very clear, no matter what documentation we're talking about, it is the responsibility of the borrower. So if anything goes wrong, SBA says, borrower, it's your problem down the road. So we want to make sure that you have everything that you need up front so there aren't any problems later on.
Okay, here's one. Probably I'll throw this one at Keith. Does a single member LLC count as a sole proprietor to use the gross income test?
I'll do the perfect consultant, and you probably heard this, when you took a business class somewhere, it depends. So a single member LLC, remember we said an LLC, you use your tax filing status. So a single member LLC may file either as a sole proprietor, but they may also choose to file as a S corporation or C corporation. So go to your tax return, and if you're filing a Schedule F attached to a 1040 as a single member LLC, then yes, you are considered a sole proprietor for purposes of this program and for as far as the IRS is concerned. But if you see a Form 1120 or an 1120S for a corporation for your single member LLC, then no, you must follow the corporation rules.
Okay, when counting payroll paid, does it have to go to prior employees you have brought back, or could you hire other part-time employees and different employees and paid out that as payroll?
I think that question is referring to any of those forgiveness reduction reinstatements. And if that is the case, it is about you protecting the job. So if I decided to leave to take care of someone in my family that needed health related to COVID, and you hired Keith in my place, great, you have maintained that job. That's what counts. It does not have to be the exact same person.
Yep.
Okay. Number of questions on EIDLs. What happens with the 10,000 EIDL loan regards PPP forgiveness, which I think you covered, but it was asked a couple of times afterwards. You want to cover that one?
Yeah, I'll rephrase or reiterate that. So, remember the EIDL program, and we're not going to talk about that, but the EIDL program, it was two components of that. You had an advance, which was considered a grant, and then you had a loan. So, for example, you submitted all your documentation for it to the SBA, and they came back and said, first off, they put you got a deposit in your bank account probably 2 to 3 days after you filled out the form on the website. that was your advance. And that ranged in size from $1,000 to $10,000, depending on how many employees you had. That's how they determined the size of your advance. So you could get up to $10,000, and they were like even increments of $1,000. So you got that amount. And then after that, you also got a note that says, okay, you're qualified for a loan. That loan could have been, I think, anywhere up to $150,000 was the maximum eligibility. So those EIDL loans, that's still a loan on the books with the SBA. You're still going to have to pay that back. Those advances, those were not included in your loan amount. That was a grant. And that at one point, that was going to be added into your PPP and be a non-forgivable portion of your PPP, but the rule changes that just came through, they changed that. So that is back to being a grant, and you will not have to reduce your forgiveness on your PPP loan. So that, say you got a $5,000 EIDL advance, you probably already spent the money and you don't have to pay it back to anybody.
Okay, I like this question because it shows somebody was paying attention. This is based on your presentation. I learned that I can apply for an adjustment to PPP one loan. Can I also apply? Will I also be eligible to apply for a PPP 2 loan, or let's call it?
Good question. And Keith and I spent a fair amount of time debating this yesterday, because here's where the rub is. It comes into the way SBA says you have to spend all that money from your first PPP loan before you can get the second one. And if the minimum covered period is 8 weeks, you don't really have 8 weeks between now and March 31st in order to be able to do that, given administrative time and turnaround. And we don't know how long it's going to take for SBA to do these approvals. So we have that question into SBA's Help Center, and we will put that in our FAQs once we hear the answer from them.
So, and let me add to that, Aaron, because I think they asked specifically about an adjustment. So let's say the adjustment was for let's say it was a seasonal one, for example, or for the partner one. I think we're still using our original covered period for that one, for an adjustment. So I think that one, there should not be that time delay issue. I think where we had concern was the sole proprietor farmer that was with no employees who was previously ineligible, whether they can get a first draw loan for the very first time in March or in February and still also meet the requirements for covered period and get the second draw loan. So I'm thinking the adjustments, because they do not extend the covered period for those. They just, it goes back to the original covered period, I believe. Those, that's what we're. Yeah.
That's what we're thinking, right? So we just want to make sure of that before we tell you one way or another. That's our interpretation. Sure. And I think it's like batting 99% with whatever SBA said. However, if you've been paying attention on this program, it changes every week. So we just want to make sure we got that one right from SBA.
Yeah, that's right. That's right. So, yeah, we'll update the FAQs once we know for sure.
What I would say at this point, that's covered the majority. There's a number of what I would call very specific questions. And what we will do is a combination of following up on some FAQs and also trying to get back. Maybe here's one more we might be able to tackle, because this is one where there may be a few more people that have this similar question. I own both a nursery business and a restaurant business. They're all under one federal ID. However, the payroll is and accounting are separate. Do we qualify? We don't qualify for the 25% reduction together, but what we certainly do on the restaurant side. Are we able to apply?
So if I heard the question correctly, John, it's one business. It's all one. They're filing, essentially it's one business structure.
Correct.
If it's just one business, it's the total business that is 25%. So if one division of your business had a poor year, but as a whole, your business did not meet the 25% reduction, then no, I don't believe you would qualify for a second draw loan. Now, let's say you had two separate business entities. For example, a winery that has the grape growing division as an LLC and the winery as a separate LLC, and they do business. The grape growing division sells all their grapes to the winery, but they are structured as completely separate businesses. And I think the important "and" is here, when you applied for that first PPP loan, you applied as separate businesses. We had some that had multiple businesses that combined them and put a single application in. Those, my interpretation would be, they need to file, it's one loan, so they need to combine them for any second draw and qualify that way. But I also know of businesses that had separate businesses that applied separately by those specific business entities. And in that case, if one of the business entities qualifies as a 25% reduction, yes, that entity would, even if the other one doesn't. But the key is two keys. How did you apply for your first loan in terms of business entity? And secondly, what is the business entity that qualifies for the 25% reduction, and how do those two things match up?
Yep, good answer. Couple more, I think, relatively quick ones. If I previously chose to utilize the employee retention credit, can I qualify for a first draw loan?
So
there are a lot of different. Go ahead.
Yeah, I'm looking at that. As I understand it, and Dario Arezzo is our employee retention credit expert, but as I understand it, it's one or the other. So if you take the employee retention credit, you do not qualify for PPP, and vice versa. Now, I believe we're in a new tax year now, so there may be, and I'm a little bit out of my comfort zone here at the moment. So, let's say that pending further investigation, there may be an opportunity, since we're in a new tax year, to have, if you're not taking the employee tax credit for 2021, you may qualify for a first draw loan in 2021. But if you receive the employee tax, now, I don't know. I'm double thinking myself here, so I'm not sure. I think that's one that we have to, unless Aaron, you have something to add to it. I think that's something we need to investigate a little bit and make sure we're getting it right in an FAQ on our website.
Yeah, I think let's do that, because the thing that I have read most recently is if you get a credit for that, those wages are not eligible for forgiveness. It does not specify, though, from what I remember reading, about whether or not you are eligible for a PPP loan. So if you want the money, that's the question we need to figure out. I think we can say you can't have both the tax credit and get forgiveness. You concur?
Yes. No, that one I'm sure of. Yeah.
So I would say that just scrolling through here, the questions again, I think we've covered the bulk of where there was multiple people asking the same type of question. And so I think at this point, I think we should wrap it up. And again, I think Kyle stated this. We will have copies of the slides will be available after the webinar on our website. Just bear with us. It's going to take us a little time to comb through all these questions for the FAQs answers, so that may take us just a bit longer. And to reiterate a couple things that both Aaron and Keith talked about here. Like a lot of things that we do in Farm Credit, we try to divide and conquer to keep up on all these changes. Remember, this is a bit of a moving target. Aaron and Keith did an excellent job of covering things as we know them today. As we all learned through the first two go-arounds with PPP, these things can change, both because there's an interpretation change and because there is some political will to make a change. So as those things happen, we will try to keep things updated on farmcrediteast.com as we know them. So just bear that in mind. Number two, SBA directly, the good news is we have some pretty good ties with SBA. They're trying to do a good job of keeping us up to date locally. They've been pretty adamant saying they believe they have plenty of money. They had a lot of money left over from the first two rounds, even though there was a bit of an initial feeding frenzy. They would say, and we would agree, take your time, do it right the first time, because that's typically what pays dividends for people to get the most out of PPP. So, and we would echo that. And as you can tell, even though the PPP loan window is theoretically open, many lenders, including ourselves, are taking a cautious approach to make sure the first borrowers and customers look through the documents, make sure they got it right before they submit their applications, because as always, that'll get them the best result. So anyhow, that's the 2 cents from my vantage point. Keith and Aaron, it's leave it to you to conclude and bring us home.
So yeah, I think Johnny did a good job summarizing some of the key things there, and you've had those links on the web up in front of you for about 15-20 minutes now. That's your go-to when you have questions in the interim. So we'll keep those sources updated as we get new information. If there are very substantial changes, we would probably have another webinar, but we'll be posting small changes up there on that resource hub. And of course, there's always the opportunity to work one-on-one with a consultant to help guide you through the process.